Welcome, Professor. Good to have you here.
Great being with you.
Okay, the big issue, obviously, today are these tariffs that have been imposed by the United States on Chinese imports and vice versa from China and U.S. But let me put it in a broader perspective, because last October you wrote about 3 scenarios for the globe, basically global economy. And you had a bullish one that had to do with cyclical upturn paired with real reform, a bear case where there's a failure reform and there's excess leverage and stimulus, and then a middle case where there's still some upswing, there's some modest reform, but we don't quite get there. How does this trade dispute fit into those 3 cases?
Well, until now we had a global expansion, but right now there is less synchronized global growth. Eurozone, Japan, UK are slowing down. The 2 bright spots of the global economy were the US and China. But now we are at the beginning of a generalized trade war, not just between US and China, but I fear that the US is going to also impose tariffs on exports from Europe of cars to the United States. And even NAFTA right now looks like dead on arrival, as the US started a fight not just with Mexico, but also with Canada. So by December or early fall, it could be a perfect storm where the US is engaged in trade wars with Europe, with the NAFTA partners, and with China. And therefore, there could be a risk of a slowdown of global economic growth.
And at the same time, I don't know how much reform you really think has been done, but does that push us toward the bear case that you laid out?
Well, I don't expect a financial crisis or a recession, but this global expansion was fragile in the last few years. We've been episodes of risk-off and slowdown of global economic growth, and I fear that these trade disputes that are now going into a trade war are going to imply a slowdown of global economic growth, and there is always a risk that then other things happen. For example, in Europe, Italy is a slow-motion time bomb. In the US, this fiscal stimulus is undesirable, might increase inflation and force the Fed to hike more than markets are expecting. So there are more downside risks. Not downside risks that lead to an economic recession, but certainly a slowdown that's going to have negative effects on the market. This year has been a year of risk-off. Worries about inflation, about trade wars, backlash against big tech, worries about emerging markets, worries about Spain and Italy. So it's been a year flat or down for global equities and US equities as opposed to last year. So I fear that markets are going to be having a downside risk rather than upside.
So you're basically saying that investors at this moment, for all the little bits and pieces that we've priced, are being very complacent because they seem to think that ultimately this is going to all work out okay.
Yeah, the markets so far have reacted to this risk of trade war by saying this is the art of the deal, is a negotiating ploy or a bargaining chip that Trump is using. But I think that actually his main economic advisor right now, mostly protectionist like himself, he got rid of those who were more moderate. And the US is essentially starting a trade war. I think wrongly is worrying about trade deficits that are driven more by the excess of spending over income. And of course, this fiscal stimulus is going to make the US trade balance even worse. So it's a self-inflicted problem rather than something caused by the trade practice of other countries. But it's easier to blame it on China, on Europe, on Mexico, and so on. And therefore, you have also a midterm election where supposedly the Republicans and the administration may not do well. So after the tax cut, you cannot do anything on the legislative side. There are only 2 things that Trump can do from an executive point of view. One is a fight on migration, the other one is on trade.
Nouriel,
so I think that there will be an escalation on both fronts.
What do you think pulls the president back from the brink here? As you said, he's got battles on many fronts here, whether it's Mexico, the EU, China in particular. Will it take a sell-off in the markets to perhaps make him pause for thought here and pull back on some of these measures?
Maybe market discipline could have such an impact, but the president has made statements in interview in the past saying, hey, under my administration, the stock market went up 40%. So what if it goes down a few percentage points? It doesn't matter. We're fighting for the long-term economic success of the country. So unless there is a stock market crash, I don't think that's going to essentially change much. If there was a significant tightening of financial conditions with stock prices falling, credit spreads and bond yields going higher, and the dollar strengthening, that might put pressure, but we're not yet there. So frankly, I don't see anything coming from market discipline. It works on Turkey, it works on Italy, it works on Argentina. We don't see market discipline now working against the U.S. and its reckless trade or other policies.
Nouriel, you've said how you disagree with President Trump in various ways. Is there a point at which you agree, and it's on this? In the schema that you laid out, it was about reform, the need for reform, not just in the United States, but elsewhere. There's a general consensus there is a need to reform trade relations with China around the world, including Europe agrees to that, whether it's intellectual property abuse, whether it's subsidies, whether it's state-owned enterprises, and that they've taken advantage of the WTO, and it's time to reform that. You can't do that without some pain. Are you sympathetic with at least that point of President Trump, that something needs to be done, you can't get there without some pain?
I'm sympathetic to the view there are some trade practices of China that, of course, are unfair. But the way to approach it is to engage China. Secondly, take a multilateral approach. As you point out, it's not just the US, but also Europe, Japan, and others complain to it. So it's better to have a multilateral approach rather than a unilateral one. And dumping the entire WTO or starting a trade war that's going to lead to retaliation. China cannot lose face. President Xi Jinping cannot lose face politically and economically at home. And while the US has a trading balance with China, China can also start making life hard for US firms on foreign direct investment and their business activities in China. So we're starting an escalation that might lead to a generalized trade war. It's going to be not even a zero-sum game. It's going to be a negative-sum game, because in trade wars, as the experience of the 30s suggests, you end up essentially with everybody being a loser. So maybe we have concerns about China, but the approach is one that is confrontational.
I agree with you on the fact that China doesn't want to lose face here, but on a net trade basis, they don't have the capacity that the United States has to apply tariffs. How would they go about it? How would they push this war, as you're calling it, further?
Well, there are many other tools. The first one is essentially, like they've done in the past with Japan and Korea when there were political friction, they can really make life very hard for all the US firms that have done hundreds of billions of dollars of investment in China, whether it's Apple, whether it's the auto firms, and so on and so on. Secondly, this noise is leading already to a weakening of the RMB. The Chinese economy is slowing down. They're worrying about the slowdown. The stock market is already in bear market territory.
Yeah, we'll have to see.
They might have an
Nouriel
incentive
Roubini,
to actually
Professor of
weaken their
Economics at New York
currency.
University Stern School of Business. Sir, I have to interrupt you. Thank you for that.